Tuesday afternoon. This is the account traded today, and I wanted to make this video because it is now the second day in a row that price action has been really tough, like the first 30 minutes of the US session. And so I really see no point of making videos of, easy days, because no one is having an issue handling an easy day. Let's face it. The problem occurs when there are tough days, or at least tough periods of time. And I don't care what you use, we will all gonna hit those periods of time where our approach is not really working. And by working, I mean it's not really profitable. So what I'm specifically talking about is the high probability setups channel, where I post between 1 and 3, for the most part 2 or 3 signals where I see high probability setups. And what I've done is I've been following the signals. I've been taking these signals myself, and I've been posting the result in the trade journal channel. I'll just bring it here, which is available to the public. Basically, I took this account. I always post the dashboard, the rhythmic dashboard. So I took this account from an evaluation stage, 150K account, to then funded account, and whenever I can, whenever I get screenshots of the trades, I post them here again along with the rhythmic dashboard. So now this account is up like 30 semi thousand. Now, why is it up so much? Why don't I take a payout? I did take a payout, but with this particular prop firm, I am restricted as to how much I can take the first few times. So because this is a new funded account, I was restricted to the amount, and so even after taking the payout, I'm still up nicely, which is something I'm going to be talking about a bit later, why I believe in growing accounts, not to this level necessarily. After I am allowed to take out as much as I want, I will still leave at least $10,000 above the starting balance, meaning after I can take all I can take, I will still leave $160,000 balance in this $150,000 account, just because I want the drawdown availability. All right, so let's take a look at the signals and see what happened. So at 9:27, about 3 minutes before US session opens, for the Nasdaq, I posted to buy 129 or sell 97. So if we put the lines here, so the buy is at 129, the sell is at 97, 927 is right around here. So when I posted it, and sometimes it happens that the actual long trigger in this case is below where price is. When that happens, and I put it in the chat, when it happens, you must wait for price to retrace below the buy trigger. I prefer at least 10 points. I mean, there was no science behind this. The whole idea is I prefer the momentum to carry price into profit for me, right? If I want to get long at 129. So in this case, price is above. I had to wait for price to get below the trigger, and that's what happens as soon as the US session opens. So far, everything is according to plan. Again, a buy is at 129, a sell is at 97, and what happens here? So let's take a look at this. Price hits, and the high is 129.50. So I am triggered in. All right, now where is my stop? That is a great question. Where is my stop? So what I'm going to say now is for my risk tolerance. It might not work for you. I will tell you what I do. If the buy and the sell triggers are fairly close together, and for the Nasdaq, 32 points in my book is fairly close together. Sometimes they could be 60 or 70 points apart. So that's a different story. But when they're close by, my stop is actually the opposing signal. It might be too much for you, so you're going to have to figure out for yourself how you want to handle this. Maybe you want to trade smaller. I trade one E-mini. Maybe you want to trade a couple of micros or something, but I'll tell you where my stop is when the triggers are close by. 32 points is right on the edge of my comfort zone when it comes to stop. For the Nasdaq, I normally would tolerate a 30-point stop. That's for me. So when the difference is 32 points, that is just on the edge of my comfort, and so my stop is the opposite level. Well, price triggers me in, and within a couple of minutes, I'm stopped. So a 32-point stop, $640 down. So now I'm short. I am short from 97, right? 20,097. And not only do I get out, but I actually flip. I reverse. Well, price goes in like a couple of points in the money and pops right up. And this is now the second morning in a row that this happened. For the most part, those of you who have been participating in these trades, it's a lot smoother than this. But like I said, I'd much rather take a look at a really difficult morning. So I'm tagged in short, and now I'm short. I'm already down $640. Price is kind of fooling around, and looks like it again wants to go to the buy trigger. My stop again is on this opposite side, right at 129. Comes right back down. This time a nice slide down. I put my stop at break even, and price just stops me right out. So I'm still down 32 points. I could have tried and maybe trail it, but this happened too fast. I just put my stop at break even. I got taken out, so I'm still down 32 points. And it became apparent to me here, and I think I even put it in the chat, the market is waiting for the news. We did have news at 10 o'clock. The market is just waiting. I mean, this is waiting. However, if you just take a look at the price action, they look like they're waiting. I think I put that in the chat as well. Maybe I did it after the fact. I don't remember. But in any case, there is a nice slide down. Here is what I do in a case like this. Normally, I trail my trades. I do. Normally, I trail my trades. If I am down, however, I get a lot more defensive. And so while I'm trailing it, once I reach 32 points, in this case, because I'm down 32 points, right? Once I'm 32 points in profit, I'm actually simply am taking the target. I am covering the position, and now I am break even. For me, the most important thing is not to be down. I'm okay if I don't have a profit, but I don't like to be down. It's a psychological thing, right? For me, it's just psychologically easier not to be red. It might sound like a silly thing to say, but it's just the truth. I will forego the profit for the moment if I am down in order not to be down. So there was a heck of a lot more than 32 points in here. You can see from 97. I mean, it goes, quite a bit lower, over 100 points lower. I took my 32 points. I am now even. So then there was a decline, a nice decline. Again, I was already out, so as far as these signals go, I no longer participate. And then price comes up. Now, when price comes up and it breaks through this buy level. Wait, I'm sorry, I forgot something. There was actually a short. That's right, I forgot that. Let me click this bigger. Gotta tell it the way it happened. So price broke through this sell trigger, and the rule is, as I've gone over many times, I don't simply short when price hits the short trigger again. As I said many times in previous videos, you gotta allow price to come in, create a pivot, and then break. Now here is kind of to put things in perspective. if you look at the trade indications channel where I post about 2 hours before the US session opens, you can see the NASDAQ. I was actually expecting to see 180, 180, 20,180 during the US session. That's what I expected. So after they reached some levels on the downside and firmed up, I was still expecting to see the 180. However, the truth is, this here, you see this? This is a legitimate short because price came through the short trigger and failed and came down. I actually took the short and I took a stop, but because I was expecting 180, this time I did not took a full 30-point stop. I actually looked at this pivot here. You see this pivot that's created, right? Price comes up and then down. This is the pivot. So my stop was right around 111. So that made it a 14-point stop. The sell was at 97, right? I took a 14-point stop. And once I did that, I really expected them to break through to the long side through the 129 long trigger. So again, however, I am down 14 points in the NASDAQ once again. Price breaks through. I put my stop at break even. They took me out. Took me out at break even, broke through again, and this time I held. And sure enough, they hit the 180 and higher. And that's how on the NASDAQ, I was able to be finally positive. So this is with the NASDAQ HIT signal, which was tough. Normally, it's not as difficult as this. Again, I want to point out this was a difficult day, and I really much rather talk about difficult days than talk about easy days. So this is the NASDAQ. Let's take a look at the YM. All right, so the Dow was a buy at 584 or a sell at 533. Again, it was posted around like 927, 928. Somewhere here. And so what happened with the YM was seconds after I posted it, maybe 2 or 3 seconds, price immediately broke through. And this might not look like much, but this is like about 50 ticks. But it occurred to me that this move happened too fast, and chances are most group members would not be able to catch this trade, and so I did not take this short. Just to, it would not be fair if I took it while the other members had no opportunity to participate in this short. So I did not take the short just so I can be at the same place as the other group members. All right, so then price recovers, right? So remember I said we're not just going to short when price touches the sell level. We're going to allow price to come in. Price comes in and hits the buy. Now, you see the buy hit at, so the buy was at 584 and the high is 596. Technically, maybe I should have brought my stop to break even, but I did not. Again, it just happened kind of fast. And so, just like with the NASDAQ, because the distance is not too far, right? The distance is like 50 ticks, $250 per contract. I can handle that. Risk-wise, I'm okay with that. My stop is on the other side. It hits my stop. It hits my trigger on the long side. I do not put my stop at break even and take a loss as price then goes to 533. And not only do I take a loss, of course I flip to the short side. But now if you can start putting things together, right, around the same time, if you recall, that's when I took my stop on the NASDAQ for 32 points or $640. And now I have like whatever, $250 loss here, $640 loss there. So right around $900. I'm down around $900. First few minutes of trading. Now that is a tough morning. That is a tough morning. But I think I haven't put in the chat, guys. A move is coming. It's unfortunate the way this happened. It happens sometimes, right? This is one of those perfect storms where both the signals, both the instruments immediately handed me a losing trade. And that's just how it happens sometimes. Overall, I'm down like 900 at this point in the morning. And in the YM specifically, I am down to 50. I am now in the short from 533. Well, they don't go far. Again, I do not put my stop. Did I? No, I don't think I put my stop at break even. I don't think I did. I don't exactly recall if I did or not. But I don't think I did because I remember saying, well, I'm going to get stopped again. So I guess I did not put my stop at break even though technically, really, according to my own rules, I should have. The low is 510, so that's more than 20 ticks. I should have put my stop at break even. I don't think I did. Price stops like a few ticks before taking me out, but I'm still short, and then comes down again. And at this point, it makes a decent move. And just like with the Nasdaq, if you remember, when the Nasdaq broke and I said I'm going to take my 32 points to cover my loss, I did the same thing here. Once I reached like 50 ticks in profit here, I just covered the trade, and now I was at break even. They're coming again to the sell trigger, and as we know, we're not simply taking a short when price hits the trigger from below. We're going to allow price to come in and then go down. My stop in this case would be right above this pivot. Right above this pivot, price breaks, and I get a nice profit on the downside. This time I trailed it. I don't recall at what point I was stopped. Price comes into the trigger again. Now you see this? To me, this is not enough to reload the trade. It's just not. So unfortunately, I missed out on this move down because I really like to be like this is good. This is a good amount of space or points that price comes in above the short trigger. This is just not enough for me. But again, this is very individual. It's not like there are rules with that. If you're comfortable with like 10 ticks above, then this is fine. I wanted it to be at least maybe 20 ticks above, and so I did not take this short. And then, very similar to the Nasdaq, if you recall, price breaks through, now does give a nice move above the short trigger, and if you see this, look at the low, 532. So it took me in the short by one tick and stopped me out. So again, my stop is above this pivot. Once price comes in, right, my stop is right above this pivot, the high that price made before triggering short. And once again, I took a short. I took a loss over here. Then price breaks through, and again, I make up the loss, and now I just wait. So again, once I'm down, I just want to make up the loss. I took a loss here on the short, made it up on this move higher. So then price breaks to the downside. I trail it. I'm taken out. This is not enough to trigger me in. You see this? Not enough movement in to trigger me in. This is over here. Take a short. And finally get a decent move down. I don't think I put my stop at break even here, even though I should have. I don't think. No, I didn't. I did not put my stop at break even here. If I did, by the way, this probably would not have been enough to trigger me in another short. And I think that's what I was thinking. I was really waiting for price to test this. And finally, I was just exhausted by that point in the morning. I took my profit. And so this was it. This was the total for the morning after taking a whole bunch of trades, I don't know, 8 or 9 trades altogether that I took. It was a tough morning, but you see, even tough mornings, if you just stick with it, could be profitable. That is why, by the way, I never over leverage. According to my own rules, I can trade one E-mini for every 3,000 that I have available in drawdown. The account is 181,000, I believe. This is a 150K account, so I have over 30,000 available in drawdown. But I still trade only one E-mini. And, so first thing in the morning, I was down 900. And that doesn't scare me. It doesn't even stress me out. I don't like it, but it doesn't stress me out because I know I can recover from a $900 loss. But if I'm trading 5, 6, 7 contracts, and all of a sudden it's not a $900 loss, it's maybe a $6,000 or a $7,000 loss, well, just psychologically, it's a lot heavier. And that would stress me out, and I don't like to be stressed. So for me, it's much easier to simply trade one E-mini, even though I can trade more, and then just copy it onto one or two other accounts, and I'm fine. This way, I am not stressed. So this was a tough morning, and I wanted to present it to you, and I wanted to show you a way to handle it. There will be such mornings. And the interesting thing is, when they come, it's rarely just one. It seems that they come in bundles. So we had a tough morning yesterday, Monday also. If you take, at least for me, yesterday was not an easy morning either. And even Friday, again, Friday was very choppy the first 30 minutes of the US session. It just happens. It's just how it is. And that's why you cannot allow, quote, bad period of time to be very detrimental. Because it is possible to recover as long as your account is alive. And your account stays alive if you don't over leverage. So if this helps you, please leave a like. Make sure you are subscribed. Come check us out in our Discord group. By the way, the channel, I think I said that, but the channel where I post my trades from this, from the high probability setups, that's available to the public. And it goes back. It goes back a whole bunch. As I said, this account started as an evaluation account, got funded, and then every time I can, I post the results of this funded account, and it just goes back. So come and check it out. Thank you, everyone. See you next time.